everyone or not see everyone. Oh, we actually have some other people joining us here live. This is awesome. Hi, Rebecca.
Hey, Myra. Hi. I don't have a camera on this computer, so.
That's okay. We're gonna mute you because we're live, and then if you have a question, just do like the hand raising symbol, and we'll unmute you.
Sounds good.
Okay, great. All right, so I'm just gonna share this real quick to the group. Here we go. Sharing to Wealth Dynamics group. This is so exciting. And we have Celeste with us today, live all the way from somewhere in Texas.
Yes, DFW area. Yep.
Yes, exactly there. And I get a lot of questions about payroll all the time. So hi, Lexi. Lexi's joining us. And I keep threatening to make Celeste come on and answer some of these questions for us because she's my payroll specialist. She's also my bookkeeping manager. So she kind of knows everything there is to know almost at this point about bookkeeping.
Yeah.
Yeah. And director. Thank you.
Oh, yes. Director. Yep.
Director, not manager. I take it back. And she knows all the hard questions about payroll. So we're gonna start rolling through them. If any of you guys have any questions about payroll, now is the time. If you have them, if you're watching this not live and you come up with the questions later, you can write them in the comments, you can email me, whatever you want, but we're going to answer some of your burning questions about payroll. We're gonna start kind of easy and start with some of the easy ones to, ease you guys in gently. And then we're going to do some hard questions, and we might even show you some examples of some of the payroll forms and stuff like that.
Yes.
So without further ado, because there's a lot to say about payroll and we only have a half an hour, let's start with some of our questions. Okay, I'm going to answer some of these, and then I'm going to go to Celeste for some of the harder ones. All right. So some of the questions that we get is, how often should I run payroll? That one is kind of up to you. If you own a business and you have employees and they want to get paid every week, pay them every week. If you want to pay them every other week, pay them every other week. The more often you run payroll, it doesn't make your payroll processor software usually cost more. Depends which one you're using. If you're using ADP and Paychex, they charge you for each time you run payroll. If you're using QuickBooks Online Payroll, they just charge you once a month. So it doesn't make your payroll necessarily cost more, but it would take more bookkeeping time to run the payroll. So that's something to keep in mind. If you are a business owner of an S Corp and you have payroll, you're running payroll just for yourself, I would say just for cash flow purposes, you should run it at least once a month. Celeste, do you have anything to add to that?
Yeah, normally I recommend at least once a month. Some clients like to pay themselves quarterly. That's all fine. It's really more of depending on how much payroll is when I recommend to go at least monthly, because your payroll tax is based on how much you're actually paying yourself as a salary. It's much easier to pay monthly versus, in a lump sum quarterly. So I definitely recommend at least monthly on the owner salaries for an S Corp.
Yeah. So there you go. Heard it from the payroll specialist. She deals with and or runs, I don't know, how many payrolls do you think, like between the downloads, the manuals, and the QuickBooks payroll, like at least 25 payrolls?
Yeah, something around there, or even a little bit more. Yeah.
And when I say payroll, I mean companies that we're doing payroll with. So somewhere between 20 and 30 companies payroll that she's dealing with almost every week. So she's been doing this a while now. Okay. The next one is, how should I pay my employees? So, I mean, definitely with US money, if they're in the US, I wouldn't recommend paying them with like shekels or South African rand, anything like that. That usually doesn't work out so well. as far as how to pay them, we always are going to recommend that you have a payroll processing software. It's much more difficult to run it if you're doing like, direct payments and try to figure out the tax afterwards manually. It takes a lot more work. So I would just say, get a payroll processor. We do all QuickBooks Online. So we do QuickBooks Online Payroll. We have clients that use ADP. We have clients that use Gusto, however you say it. We also started using Patriot Payroll recently for some of our clients. That's a very simple, inexpensive payroll processing system that does everything we need it to do. I never recommend paychecks these days just because they're so complicated and dinosaur and they don't really work well with QuickBooks Online. That doesn't mean that they don't have good things, and I'm not saying switch off of them if you're using them. Sometimes it's a lot more work to switch payrolls than to stay. But for instance, paychecks might be charging you $500 to $1,000 a month, whereas QuickBooks Online Payroll would charge you $50 to $100 a month. So that's kind of one of the things, and it connects with QuickBooks Online Payroll and imports where you need it and does what it's supposed to do.
Yeah.
Anything
Yeah, no, I do have some clients that, if it's how you pay your employees, some do pay paper check. That is obviously a little bit harder to track on the back end. But I have some clients.
But do they run like the payroll?
Yeah. So what I recommend is if you're wanting to pay by a physical paper check, definitely still run it through the processing system. So I do have a couple of clients that want to pay, whether it's physical check or through a third party, Zelle or whatever it may be. It's a little bit easier on them. But I still run the payroll through the software. Everything exports. I just uncheck direct deposit and it's a paper check per se. So then the client then pays out the net amount, which is super easy to match to once the expense clears and we're in QuickBooks Online, the record's there. So it's really easy to match. So I would definitely say if you're going to do paper check, for sure, still run it through your software. It makes it so much easier. Your W-2s can be ran through there. You have your, quarterly forms ran through there. So I do recommend that way.
Exactly. Yeah. Like the one thing we would tell you 100% not to do is to just pay people, payroll and not track it anywhere. We actually had that happen one time with a client kind of at the beginning of COVID. They started doing net payrolls and then it wasn't tracked anywhere. And we had to literally recreate the payroll for the entire year based on what the net checks were and calculate out of that what the taxes should have been.
Yeah.
And it took many hours. And Celeste had to rack her brain and work it backwards. And that client had to pay us a lot of money to figure it out when he could have just, if he was going to do net checks, had the payroll records, and then that wouldn't have happened. So, don't do that. Okay. So the next thing we want to talk about, okay, this is something we're gonna make Celeste talk about this. What are pre-tax exemptions, or sorry, pre-tax deductions? What do they get used for? What are the different examples of them?
Pre-tax deductions normally fall within, healthcare, insurance, dental insurance, any type of insurance on that end, 401k deductions. Some people, some companies offer, with their insurance, they have HSA accounts. So you then have your HSA funds that are going to be pre-tax. And then, technically this falls within, I say as well, taxes is going to be the employee taxes. So you have your federal, you have your Social Security, and you have your Medicare as well. That kind of falls within a pre-tax type of scenario. So, but yeah, those pre-tax deductions are going to be more so along the lines of insurance and stuff that goes based off of your gross income, gross payroll.
And then how does that work? Like, let's say you're the business owner is paying your health insurance. Does it still show up on your W-2? Like, what does it mean that it's pre-tax?
Yes. So with that, it does show up on the W-2. There's normally, I believe it's box 14 off the top of my head. I believe it's that it does show that you had basically a deduction off of your payroll for every pay period. So say you get paid bi-weekly, you had $100 taken out bi-weekly of your payroll check. And then that is then put on your W-2 that show that you had that deduction. So it's showing on your W-2 that way.
Good. And there you go. And if anybody has any questions on that, feel free to write it in the comments, or if you're in my Zoom, raise your hand and we will answer it for you. Okay, so another question that we get is, what is the difference between exempt and non-exempt employees? So I'll answer that one. Basically, an exempt employee is considered a salaried employee. Now, there are rules and they do differ by state. They also differ, based on what the person's job is. So it's not that you can pay someone as a salaried employee with no overtime just because you don't want to pay overtime. There's rules to what counts as an exempt employee, meaning you don't have to pay overtime. So first of all, in order for them to qualify as a salaried employee, you have to pay them their whole day salary, even if they only showed up for part of the day. Honestly, most people I know are hard workers, so that only happens if they had like a doctor's appointment or something like that, and they usually want to make up the time where they work other times more than their 8 hours. So that's never been a problem for me, for my exempt employees. The other thing is, to qualify to be an exempt employee, they either have to have a managerial position or a professional position where they have to use their own judgment. If they are, a clerk or a receptionist or something like that, they may not qualify to be a salaried employee, an exempt employee. The other thing is that it has to be usually twice minimum wage. So if you're in California, I think minimum wage is like $15 an hour now, so it would have to be at least $30 an hour. If you're in California still, it's a beautiful state, but time to move to a better state for taxes. If you're in a lot of other states where the minimum wage is a lot lower, then keep that in mind. It has to be at twice minimum wage. So there are other specific rules for different states, but that's the main thing. And we don't normally get into that too much with our clients. They tell us who's on salaried and who's on hourly. And if we notice that somebody was being paid salary, that it didn't make any sense for them to be paid salary, we would say something. But we are expecting people to make that decision, make an educated decision on that, just in the same way that you need to make an educated decision on who should be 1099 and who should be an employee. And if you do need help on that and you're not really sure, reach out to us. We can absolutely help you determine, kind of go through the list that the IRS has, that your state has. But those are the general rules. Okay, another question that we get is, what is unemployment tax? I feel like that's not the real question. The real question is, why am I only getting part of my paycheck? Like, what are all these things coming out? Because as an employee, you do end up with only 70 to 80% of your paycheck. So I'm going to give that one to Celeste. Celeste, okay. What are all these things coming out of my paycheck?
Yes. So as an employee, you are subject to Fica taxes. That's kind of a word that everyone is used to, Fica. So like I mentioned earlier.
That stands for Fica. It's like federal.
Yeah, federal. Off the top of my head, I can't remember exactly what it is, but essentially it involves federal withholding, which is based off of how you fill out your W-4. So, are you single, married, filing jointly? Did you have it?
Yeah, it says, is this really it? It says Federal Insurance Contributions Act. I thought it was something else, but there you go.
Yeah. So yes, it depends on your federal withholding bracket, falls along where you fill out on your W-4. So you can file single, married filing jointly, married filing separate, etc. Do you have any? The IRS did change the form, I believe in 2020. It no longer allows you to claim dependents, but you can still put in a dollar amount if you have children, etc. So that's your federal withholding. You have your Social Security and you have your Medicare. So what I always normally have to explain, and I've had this question before, is I don't have Social Security, or I don't have Medicare at the moment, or whatever it may be. Do I have to have that tax taken out? And it's like, unfortunately, yes, that is just a qualification or a responsibility as an employee working in the United States, that you have to automatically contribute to Social Security and Medicare, whether you are within the age to receive Social Security or to receive the Medicare benefits. So that is always something that you will, no matter what, see, depending on your position, where you work, and again, based off your W-4, if you have children, and depending on your wage, you may not see a lot of federal withholding taxes come out. But again, that's kind of just based on what state you live in, you know, how many dependents you have, what you file as. But yes, those are the main taxes that come out from an employee standpoint. Unemployment tax, that's actually paid on behalf of the employer. So you're going to actually see, depending on your state, you will pay a certain amount for your employees. So for Texas, for instance, you pay on the first, off the top of my head, I believe it's $7,000. First $7,000 in wages, you pay a percentage off of that as an employer. When you first start out, and this is with most states that I've filed for unemployment tax accounts, you start out at beginning rate, and then based off of their wages, again, the $7,000, you would just, it's a percentage off of that. And I believe in Texas, it's $243 an employee in Texas. And then again, it just varies by state. California does have a few other percentages. They have a little bit more that you pay into for California. Florida is just
California.
Yeah, Florida is a simple state. They just have, you know, a rate off of the wages as well, similarly to Texas, but I believe Florida is 9,000 in wages. And then, but yeah, it varies by state. So you are going to be paying.
What do you mean by 9,000 in wages? Like you have to pay taxes on the first 9,000?
The first 9,000, yes. As an employer, once they've reached $9,000 threshold, you no longer have to pay unemployment tax on that person. So they very well may hit that in the first quarter if they receive 9,000 in wages, or even in the second quarter of the year. So it stops at that point. You no longer have to pay unemployment tax on that.
So did I understand this wrong my whole life? Are the employees not paying into the unemployment?
Right. It's the employers paying on. So that's actually a tax deduction on the employer side. So you will see that if we're handling your payroll, you're going to see on your profit and loss that a part of the payroll taxes as an employer, you match Social Security, you match Medicare that are deducted from an employee's paycheck. Again, that's like on the employee side, you cannot not contribute. So as a business, you also match Social Security and Medicare. And then the additional tax you see on your profit and loss is going to be the unemployment tax that you pay out as the business. So yes. Yeah.
Good. So you guys, this is why you hire smart people. So you don't have to know everything about everything. Great. Okay. Now, one thing that Celeste really specializes in is doing these manual payrolls, not because we want to do them, just because sometimes they have to get done at the end of the year. You know, someone's newly elected as an S Corp, something like that. They haven't done it yet. So I know I go on and on about how you should be running payroll throughout the year. If you did an S Corp election, you need to set up your payroll now so that you're not trying to do it at the end of the year. Because here's what happens, guys. As soon as you do that manual payroll, all of the payroll taxes are due right then before you can file your annual taxes. So it's why you want to do it right away. But I'm going to let Celeste walk you guys through this painful process. Now, I'm sure it's not that painful. It's just time consuming. And kind of explain what she has to do that.
Yes. So on a manual payroll, usually I am setting up someone on all our tax accounts. So whether it's just the sole employer that we're doing an S Corp salary for, or, you know, they ended up hiring new employees at the very end of the year and they haven't ever run a payroll before, but they're going to do it before the end of the year. So I normally have to register everyone for a tax account. So depending on the state, you may be paying state taxes, state income tax, and additionally unemployment tax. So those are two tax accounts usually that have to be registered for. And then obviously as well, you're going to be paying the IRS. So with the manual payroll, depending on, I'm going to actually just use an S Corp owner payroll because that's normally what I do when I'm doing a manual payroll. Usually they take owner draws throughout the year, and then it turns out they've taken $75,000, $100,000, $150,000 in owner draws. Well, we've got to actually, as an S Corp, you do have to have a reasonable salary. So you can't just take all of your income per se from the business and call it an owner draw. You do have to actually convert a portion of it. I believe, what is it, 60-40 at least, or what is it that as a reasonable salary?
Yeah, it has to be a reasonable salary, which can depend on a lot of different things. Typically, the CPA will recommend at least 50%, but obviously depends. If you have a $2 million profit, no one's going to say that you have to have $1 million in salary. And payroll at that point, it just has to be a reasonable amount. What would you pay an executive in that line of business?
Sure.
100, 150, 200, so it's not necessarily a hard and fast rule. It just has to be a reasonable compensation.
Exactly. And that is something normally we do recommend. I've given numbers, Maya has also recommended, but at the end of the day, we do recommend you talk to your CPA, because they're going to see your final numbers. They're going to tell you, okay, this is what you're going to need. That's going to best benefit you. So we always recommend that you speak with your CPA. However, separately from that, so like I said, they took, say, $100,000 in owner draws. We're going to end up converting 60% of that to salary. So then what you're looking at is a majority of the $100,000 you now have to pay taxes on. So you're going to be paying federal withholding, Social Security, Medicare. So not only are you paying Social Security and Medicare as you receiving the money, then as a business, you have to also match. And then you have to match, depending if there's state income tax, you got to pay the state income tax, and then you got the unemployment. So something around $50,000 to $60,000 in wages, you could be paying, 10, 15 to 20,000 in payroll taxes.
It ends up being like 30 to 40% between the employee taxes and the employer taxes.
Yeah, so that's why we definitely recommend the sooner the better. The time you start registering, you convert over to an S Corp and you're actually filing as an S Corp, the sooner the better we can get you on payroll, the better, because there's a lot of manual payrolls I do in January that were technically dated December 31st of the prior year. And it's kind of a sticker shock whenever clients see how much they have to pay. And I would much rather get you set up on a monthly basis where you're just paying, a couple $1,000s, every month, or even maybe $1,000 every month versus a huge lump sum at the end of the year in January when everything is due.
Yeah. And how long do you think it takes you to run a manual payroll as opposed to just, if you were running it every month through QuickBooks? Because you have to basically, when you're not running it every month through QuickBooks, you have to all of these payroll reports got filed at zero, basically. So you have to redo the payroll reports, redo the W-2 on top of doing payroll. So how long would you say it takes? I think I usually estimate like 5 to 6, but sometimes up to 10 hours.
Yeah, that's unfortunately that does happen. If I can catch it before January deadline, it might be a little bit shorter, but to be completely honest, if I'm registering all of your tax accounts, I'm then getting the percentages of what you owe based off your tax accounts, and that state requires you to pay. It takes a lot of time. At least 6 hours is what I quote that it's going to take, and to be able to do everything. And then it's not even something I can complete in one day either. I have to wait for your tax accounts to be accepted, and then you get a confirmation and whatever it may be. So it is quite a lot of, I would say it's difficult for a person that hasn't actually done it before. It's quite difficult to do it. As for me or anyone who works for us, once you're trained in that position, it's not as difficult, but it is very time consuming. So it just much better to not be in a time crunch. So if we're actually after the January 31st deadline, again, filing a payroll amendment, depending if something got filed on your behalf, we have to file like additional corrected forms. And that's just
amendment.
That is
not just a manual payroll. Now we have to amend the payroll
exactly
forms that are filed.
And the IRS, since even before COVID, was completely behind on things. So if they're even gonna, you might be receiving a letter like, hey, you didn't pay this, or hey, here are your penalties and interest, but then we did a payroll amendment, they haven't even processed that on their end, you may be subject to more penalties and interest on top of that. So get in, start doing it beforehand, whether you need our assistance to help you get set up and it's something you want to do on your own, or if it's something that's just completely out of your wheelhouse, you just don't even want to deal with it, just reach out to us and we can help you.
Yeah. Exactly. That's usually my line, but Celeste said it for me.
Oh, okay.
Okay. Can you explain a little bit about what's difficult about it? And then I know I also wanted you to go through, like, I know it's different in each state, but registering for the states, I'm always like, it's a pain in the ass. You don't want to do it. But first of all, what's difficult about doing a manual payroll and amendment? And then second, what is required in order to register someone for a state?
So the difficult part is, I would say, all your calculations are correct. I definitely use, a Google sheet or an Excel sheet. I input the gross amount. I actually make my own template because it's much easier to do it that way. And as soon as I get the tax account set up and I know the percentages, I can just plug them in and I get that. But if you're not well versed, it's very easy to miscalculate, or you think that this is your tax amount that you have to pay. And then you're also, filling out the forms, and then you're not aware that you inputted the wrong amount and now your tax forms are again off. So I would say the difficult part about that, aside from the time consuming process and having to make sure you have everything checked off, I would say that is probably a difficult area of it, where it's very easy to mess up if you're not paying close attention, or you're just unaware of something. And then on the other side of the question, you said what you need to set up a tax account.
To register for a new state.
So for any new state taxes, you're going to need your EIN. That's always what they're going to want. And you're also going to need to have some require like filing information, but obviously you're going to have all of your business information, where you're registered, your EIN, also the officer information. You're going to have to know, obviously if you're the officer, the information, your social security, your address, everything of that sort. And then say you're actually have a few different employees in different states, you are going to have to sign up on those registrations. And now it's a little bit easier with applications, where they understand that a lot of people are working remotely now. So you as an employer can say, no, my business is registered in Florida, but I have an employee in Colorado, or I have an employee in New Jersey, or whatever it may be. They're a little bit easier to fill out. Some forms have not been updated, and I have had to call the tax agency and been like, hey, this company is not the employee's address. It's not where this mail is going or anything like that. I want to make sure I'm filling out this form correctly, because it's not updated quite yet on some states are just not updating it regularly since the pandemic, which again, like I said, it's much easier now. A lot more people understand that people are working remotely from different states. But yes, basically where your employees reside, you're going to need to set up a state tax account for where they live, because you've got to pay unemployment in that state. They've got to pay their state income tax. That's but basically what you need on that is all your information.
And then I want to add to that we're talking about government websites, and every state is different. So for me, for instance, I'm hiring bookkeepers in all different states because we're all remote. And then I make Celeste set them all up, because every government website, I don't know how many you guys have been on, they're not easy to navigate. And you know what information you need to give them, but you're like, where do I put this in here? So, whether that's,
I was gonna say, some sites are not easy to work with. You don't know, like you should be able to figure it out, but they don't make it easy for you. So
how's Florida as one? Is that one pretty simple?
Florida is pretty good. And actually I do like Florida's, because if you also need like a sales tax, they kind of give you like a questionnaire in the beginning of Florida, where like, do you do any of this stuff? Okay, this is what you're gonna have to sign up for. So you kind of can do it all in one go. I love that. I believe Colorado is the same. I remember when I had to file a few for Colorado, again, it was like, what do you do? Do you have 1099 contractors? Do you have employees? Do you sell things? Blah, blah, blah. So you can kind of get it all in one go. Some other states though, Nevada is not a user-friendly portal. They don't even allow you to pay with an ACH payment. You've got to like send in a form. I have to like mail in a form, and they have to they can take 60 days to approve it. Might as well just send in a check. Like, it's just, some websites are a little bit more on the dinosaur side. But yeah.
I mean, Nevada, as much as we love Nevada, they're a little bit like Wild West still. So kind of understandable.
Yeah.
And then the California website is just complicated from my recollection. But they try to make it really modern, but then they add more things into it that make it complicated.
Yeah.
So, but they're all different. Like if you even try to go start filing sales tax in different states, like if you are filing sales tax in a state that has nexus, or if you're selling out of state, it starts getting complicated fast because it's government websites and it's not standardized across the boards. They're all different. They all were created by different people. So some of them are from the 1980s.
Yeah.
And some of them are not so bad. They're from 2003. Okay, so those are our main things that we wanted to go into. I know that we have like a lot more we can talk about payroll, but we only technically have a half an hour. So if anybody has any questions, or anybody in my live has any questions in my Zoom, feel free to either raise your hand or type the question, or you can actually say it out loud if you want to. I can unmute you and you can say a question. Otherwise, I think we didn't get too deep into payroll because we only had
Explanations on payroll. Yeah.
Yeah, but we'll do like a part A and a part B.
Yeah. I
We'll
did see
do more now.
Rebecca's comment on here. The employee pays a smaller portion of the unemployment. I will say most states I deal with, it's going to be the employer paying those unemployment taxes. But if you're in California, yes, you will have, they're named something different, like it's, you know, state disability or whatever it may be. So as an employee, yes, they're depending on your state, like California, I do know, they have smaller percentages you pay on an employee side, but you also mainly pay unemployment as an employer, because if your employee were to request unemployment, then, you know, that's coming out of your funds that you've paid in.
Yeah.
Yeah. But yeah.
Exactly. But you
No,
don't
it's
pay
actually-
federal unemployment.
Oh yeah, the federal,
Right.
that one, the Fica tax. So that's the 940 form that you're going to be filling out. That's based off of everyone's wages as a whole. And then per employee, that one is $7,000 max that you're paying on a threshold for each employee. So it's $42 that it comes out to for every employee. So if you have 10 employees, you're paying, you know, $420. So yes. But yeah, it's $42 per employee. That has not changed as far as I know in a long time that I've done payroll.
Well, there you go.
Yeah.
You heard it here first, folks. The government hasn't changed something in a long time. Okay, awesome. So we're basically gonna be wrapping up here in a second. Again, if anybody has any questions, feel free to write them in the comments. If you are seeing this later, you can still write in the comments. You can email me, maya@solvencynow.com. You can go on our website, solvencynow.com. We're also on LinkedIn under Maya Weinreb, on Instagram under Solvency Now, on Facebook. You can either go to Maya Weinreb or Solvency Now. And we just started a TikTok page called Solvency Now as well. I think it's called Solvency Now Bookkeeping. So we're going to be making TikToks, which apparently have to be really, really short with minute pieces of advice. So you'll see that soon too. Maybe they'll be like singing and dancing with it. Celeste, you want to make some dancing TikToks with tax advice?
No,
probably not. Probably not. All right, good. Well, thank you so much for watching, and we'll see you next week, Thursday at 7 p.m. Eastern on The Bottom Line Live. Bye.
Bye.